This is the Financial News Network. I'm Christy Duffy. Goldman Sachs posting third quarter EPS of $2.98 Tuesday. EPS was ahead of Wall Street analyst consensus estimate of $2.28. Revenues in the quarter came in at $8.9 billion, toppling the average analyst estimate of $7.92 billion. Goldman reported tangible book value per share of $116.23 in the quarter and a Tier 1 capital ratio of 15.7%. Investment banking revenues was $1.12 billion, up 24% year over year and 22% higher sequentially. With me to discuss the results and what's next for Goldman Sachs is Rochdale Securities Dick Bove. Dick, how would you rate the quarter relative to past quarters? The stock is up today, but it seems like a quieter reaction. Perhaps the market is focused on declines in tech stocks today?
I think that what you're seeing in Goldman Sachs is that two of their core businesses did much better than people thought they could. First, the trading business, which is the core business, the biggest business, the most important business at Goldman Sachs by far. That business essentially showed a big increase in equity trading, showed a decline in fixed income trading, but the decline was nowhere near what was expected. Secondly, their investment banking business, which is, again, the second most important business that they have, showed improvements right across the board, and no one expected that at all. And finally, their asset management business showed a gain also, and that really wasn't expected. So the three biggest parts of Goldman Sachs did better than people thought they could. But most importantly, it looks like what Goldman Sachs is doing is sustainable, that basically the company will be able to maintain the momentum established in this quarter, which means that earnings estimates on this company, I would assume, are being raised right across the board, and that's the primary reason why the stock is doing so well.
Do you expect Goldman Sachs to be making changes in business structure as a result of financial reform?
I think they've already made them. I don't think that there are any other changes that are necessary. They got rid of their proprietary trading. They cut back their private equity investment. They shrunk the size of the balance sheet. They've eliminated some of the businesses which the government perceives to be inappropriate, such as allowing, if you will, the underwriter to work with the company to pick for example, loans that would go into a mortgage-backed security. So I think that the company has already changed their businesses, and I think they're in position to earn a lot more money.
Will more prop traders leave to start their own hedge funds?
They've already left. In other words, these are events that people react to relatively quickly. Those traders who were doing proprietary trading have generally left the company or have attempted to establish funds of their own to continue to do what they were doing, but those traders have already gone.
The CFO said that they can't quantify the revenue impact of financial reform. Can you offer any estimate as to what the impact will be in terms of revenue or earnings over the next few years?
I think that what you'll see is that over the next few years, money supply will continue to grow, that people will continue to need to issue stock and issue debt. There will be a need to trade the existing instruments, and therefore, over time, the growth rate of Goldman Sachs should get back to what the growth rate has been historically. I don't think that much as the United States tried to cripple the company, that the United States succeeded in doing so.
Okay. Goldman said that the recent increase in hiring was largely outside of the U.S. and in risk management. Given the regulatory uncertainty in the U.S., have international markets increased in importance for Goldman with respect to growth?
Well, the reason that international markets have increased in importance is because they're growing and the United States isn't. And the job of a company like Goldman or any other company, Coca-Cola or, McDonald's or whomever, is to go where the growth is. So if you take a look at the population from India to the Pacific Ocean, there are 10 people there for every one person in the United States. Plus, those people are seeing their incomes and their wealth grow at a much faster pace than is growing in the United States. So if these companies, and I'll take them all, from Coca-Cola to McDonald's to Goldman Sachs, make the decision that they have no interest in going outside the United States, then they're consigning themselves to do business in the slowest growing economy, if you will, among the major economies in the world. If they make the decision to go where the business is, then they're going to go outside the United States.
And do you think that Goldman has largely put the recently settled SEC investigations behind it?
Yeah, I mean, there's nothing that is left from it. I mean, Goldman Sachs will be dealing with lawsuits for the next 3 to 4 years, just the way Bank of America and traditional banks will, because everybody's suing at the present time related to whatever it is that they bought in the financial boom, and they now have lost money on these instruments and they want the money back, so they're suing to get the money back. And Goldman Sachs is certainly the target for a lot of these suits, but if one thinks that the United States government is going to, do something, to sue Goldman Sachs at this point, I think that's kind of misplaced. It just is highly doubtful that it will happen.
Thanks, Dick. For further updates, make sure to subscribe to our YouTube channel. This is the Financial News Network. I'm Christy Duffy.